This taxable year, Trapp Inc. had $400,000 of gross profit from its operations, received $160,000 of dividends from the Vaughn Corporation, in which they had a 25% interest, and they had operating expenses of $410,000. They would like to know what the dividends received deduction is. Dividends received deductions, first and foremost, are focused on what percentage ownership does the company have. We're in that 20 to 80% range, or 25%, so we're dealing with an 80% dividends received deduction. We also have some other limitations we need to look at when we begin to look at their taxable income. So let's put all of those pieces together in this problem. What we have is as follows. They have a gross profit of $400,000. They receive dividends of $160,000, so they have total income of $560,000. Their operating costs are $410,000, which means that their taxable income before the dividends received deduction is $150,000. Now, in general, your limitation says take 80%, because that's the percentage of ownership that we have in that 20 to 80% range. Take 80% of the dividends you received, which is $160,000, and that's $128,000. When I take the $128,000 and compare it to the $150,000, this does not generate or create a net operating loss. Okay? However, if I take 80% of the taxable income without regard to the dividends received deduction of $150,000, I get a smaller amount, or $120,000. The tax laws say your deduction for the dividends received deduction is the lesser of these two. The lesser of these two, of course, would be 80% of the $150,000, or the $120,000. So your proper answer to this is $120,000. Interestingly, is that if the $150,000 minus the $128,000 generated a net operating loss, you would use that larger amount. But take all of your income minus your deductions without regard to the dividends received, do your test, and take the lesser of those two.